And it's 10 a.m. right here in Lagos, Nigeria. Great to have you join us on Business Morning. I'm Ladi Williams. First off, let's take a look at what's in the news. We'll see oil prices rose more than $1 today as more than a 7-year high, and worries about possible supply disruptions after Yemen's Houthi group attacked the United Arab Emirates, escalating hostilities between Iran-aligned group and a Saudi Arabian-led coalition. Analysts believe the new geopolitical tension added signs of tightness across the market. Brent crude futures rose 85 cents to $87.33 a barrel after earlier hitting a peak of $87.55, the highest since October 29th, 2014. U.S. West Texas Intermediate crude jumped $1.13 from Friday's settlement to a more than 2-month high of $84.95 a barrel. Trade on Monday was subdued as it was a U.S. public holiday. And the Consumer Price Index, which measures the rate of increase in the price of goods and services, has increased to 15.63% in December 2021. The rate is 0.23% points higher than the 15.40% recorded in November 2021. The Statistician General of the Federation, Dr. Simon Harry, who was speaking with reporters, explains that food commodities, prices of goods such as bread, cereals, meat and soft drinks, among others, experienced a hike. Do take a listen.
The Statistician General of the Federation leads other staff of the organization to reel out the latest Consumer Price Index, a tool that measures the average change over time in prices of goods and services consumed by people for their day-to-day living. The figures are not heartwarming at all.
Prices of goods and services by raising them up. And so you recall...
A look at the figures from April 2021 to August, as well as December of 2021, shows a rise. This concern has been on the minds of Nigerians, but the Statistician General explains how the figures are calculated.
It is pertinent to explain that the Consumer Price Index measures the average change over time in prices of goods and services consumed by people for their day-to-day living. The construction of the CPI combines both economic theory, sampling, and other statistical techniques using data from surveys and censuses and other sources to produce a weighted measure of average price changes within the Nigerian economy.
While the inflation figure declined in December 2021 by about 0.23% compared to that of November 2021, prices of food items such as bread, cereals, potatoes, yam and soft drinks contributed largely to the rise. On state-by-state comparison, all items in Ebonyi State rose by 18.7%, while Kwara State has the lowest with 12.3%. While food inflation was highest in Kogi State at 22.8% and Edo State with the lowest at 13.2%.
The change in the declining trend for about 8 months must have been caused by the increase in prices of goods and services as a result of increase in their demand during the month under review, being a festive season. On month-to-month basis, the headline index increased by 1.82% in December 2021. This is 0.74% higher than the rate recorded in November 2021, which was 1.08%.
The figures from the NBS reveal that prices of goods and services across the country continue to rise exponentially, a situation that requires action from the relevant authorities.
Meanwhile, economic think tank Center for Promotion of Private Enterprise has reacted to the latest inflation report released by the National Bureau of Statistics. The Chief Executive Officer of CPP, Mr. Muda Yusuf, attributes the rebound in the country's inflation recorded last month to a surge in consumer spending, which was driven by Yuletide festivities, exchange rate depreciation, increase in transportation costs, among others. He however recommends immediate reform of the forex market to stabilize and reduce exchange rate volatility, addressing higher transportation and electricity costs, tackling of current security challenges in the country, as well as a reduction of import duty as some of the measures that could tame inflationary pressure. All right, now we'll take a short break. When we come back, we head to the commodities market segment with Damilola Akimbami, head of research, financial derivatives company. That's in a moment. Do stay with us. All right, now let's drill down on the December inflation numbers now with Damilola Akimbami, head of research, financial derivatives company. Great to have you. Good morning.
Good morning, Ladi. Thank you for having me.
Yeah, so we're talking earlier, and I asked you, what was your earlier prediction for December?
We're actually projecting a deceleration
exactly.
to 14.9, but we were wrong in our forecast.
Yeah.
Yes. Because we were anticipating that the impact of the consumer price resistance and seasonalities, because a period under review fell under the harvest season.
Right.
So we expected an increased supply of commodities, plus the fact that disposable income is sharply lower, that those factors will be more than sufficient to offset the price stoking factors, such as the exchange rate pass-through, such as, more importantly, the demand increase in demand that is tied to the festive season. Because if you look at previous years, 2018, 2019, and even 2020, typically there's always an increase in the month of December, because in December, obviously, we have the year-end activities, events, weddings, so you have increased spending during that period. And then there's still the underlying factors, such as insecurity that is yet to be addressed, logistics issues. And again, because of this holiday season, we always see increased demand for travel. People are going home to spend time with family. So these factors typically would increase the cost of these commodities, cost of transport. So definitely the cost push factors and inflation stoking factors, the impact of such outweighed what we were looking at from the harvest aspect.
Meanwhile, you see the food inflation, which is the biggest worry
driver.
For the poor, rose from 17.21 in November to about 17.37%. Should we be worried here?
Oh, we should be worried. I mean, it just further underlines what is driving inflation right now in Nigeria. I mean, if you go to the market right now, most commodity prices are still elevated, despite the fact that we're just rounding up the harvest season, where you should expect increased supply. So, for instance, take like a bag of rice now, the price has increased from about 28,000 to 30,000 naira a bag. So, definitely, it's something to be concerned about. More importantly, because, like I mentioned earlier, one of the factors, insecurity, which is predominant in the food producing belt, that is yet to be addressed, and definitely that would feed into, or that is affecting food inflation. Also, we have issues ranging from storage, distribution, supply chain disruptions, and more importantly, even what is happening in the global economy. We know that global inflation is rising. In fact, this is the first time that Nigeria's inflationary trend would move in tandem with what is happening globally. We know that the US recorded a 39-year high inflation rate in December of 7%. And if you even look at some of our African peers, so the likes of Ghana, Angola, Uganda, they also recorded an increase in the inflation rate, and the predominant driver is still food prices, food inflation, because again, most countries are yet to recover from the pandemic effect. So most economies are just reopening, and we know that there are still shortages everywhere. If the global economy is recording inflationary pressures, obviously the spillover effect through imported inflation would affect the food basket of these countries, such as Nigeria.
And, inflationary pressures remain a major, concern for stakeholders, in the economy. What can be done to actually tame this rise in inflation?
The government has come up with so many plans and measures. We know that, like, for instance, today they're launching the rice pyramid. So obviously there's that increased focus by the government to try and boost the output of the agricultural sector by investing in it, whether in terms of funding, in terms of infrastructure. We know that that sector the agricultural sector contributes about 30% to overall output produced in Nigeria, but the sector is still growing at about 1.2%, so there's still that disconnect. That sector is the largest employer of labor. So it's a very important sector, and we've seen that there are a lot of government reforms being put in place. Even from the CBN monetary policy aspect, we know that the CBN, the Anchor Borrowers Program of the CBN too, has been targeted towards growing or boosting productivity and output of some of these commonly consumed commodities like rice, maize, cassava, and whatever. So we're seeing a lot of that. But also you have to look at the value chain of the agricultural sector. So from processing, storage, and packaging, there's so much untapped potentials, opportunities are yet to be developed. The government needs to look into that because we have a lot of post-harvest losses, which is one of the factors that actually affects the output of the agricultural sector. So even if you are growing, you've increased your production, but you can't, when it's time to harvest, you lose most of it due to poor storage facilities or whatever. Take, for instance, tomatoes now. By the time you are transporting it from the north to the south, because it's a perishable commodity, and if you don't have the adequate storage facilities in place, if you have distribution networks, issues, for instance, bottlenecks, there are challenges, transport and travel bottlenecks, these commodities would get spoiled before they get to the market.
Why aren't we seeing more investment in, storage facilities at this time, seeing that it's a big problem?
I think we're beginning to see that investment, maybe not enough, because definitely, it's not something that just came up out of the blues. Everyone already knew that, yes, one of the things you need to invest in, especially for the agri sector, is storage.
Like, since I was in secondary school, storage has been an issue.
Yeah, so it just shows that we're not investing enough. That's just it. And we need to ramp up whatever efforts we are putting in to ensure that we have adequate storage facilities. Even back in school, we used to talk about archaic equipment being used for our farming. We still use it. So it's not as if, that doesn't mean that we haven't invested in the necessary infrastructure or equipment, but it's just that it's not enough and we need to do more. So I think that's just the issue right now.
Right. Talking about this, the unveiling of the rice pyramid in Abuja today. Yes. What can we expect, what impact can we expect from this, talking about the price of rice?
Well, first of all, a laudable event and achievement by the government and by the CBN also, because it comes under the CBN's Anchors Borrowers Program. That program has also been able to generate significant job opportunities, so at least that would help to address the unemployment issue in Nigeria. And from the report from the president of the Rice Farmers Association of Nigeria, that Nigeria is now the largest rice producer in Africa, and we're also the largest consumer of rice. So
quite interesting.
Yeah, quite interesting. And also, according to the president, we are rice sufficient, and most likely we'll start to export rice. Maybe we've even said exporting, but I don't think in significant quantum, because at least if you look at the Q3 foreign trade report of the National Bureau of Statistics that was released earlier, rice was not mentioned amongst our top at least 5 to 10 commodities. And again, you have to have the comparative and competitive advantage to be able to trade and compete effectively in the international market. The quality of the rice that we produce, can it compete with the quality of the likes of Uncle Ben and other internationally known rice that are being sold both in Nigeria and outside the country? So these are some of the things we need to look at. So definitely laudable, but again, there's still work to be done. We need to address the value chain issues, challenges. We need to address and tap into the opportunities so that we go from being rice sufficient to actually exporting and even broadening our revenue base. So, imagine if we can start generating more export earnings, more forex from rice.
Dire need of,
and we know we still import rice to an extent, despite the fact that it's supposedly banned and all that. So imagine if we can start exporting it, we stop importing it, we reduce our import bill. It's something that needs to be looked into. Yeah,
very, very, very important. But what else is happening with other domestic commodities right now?
Oh, well, what we've seen is that the price decline, because in January, because it's a slow month, so typically you expect that commodity prices should start to decline or trickle down. But we're yet to see that occur in most commodities. So most commodities are still relatively flat. One, it could be attributed to the fact that a lot of the farmers are yet to return from their villages, and that could affect supply, and also low disposable income. After a supposedly dirty December, yes, exactly. Yeah. Yes, disposable income, reality sets in. So I believe that by the time we enter February, we start to see, we start to get a better and clearer picture of the commodities market. And bear in mind that we're going to enter the planting season. And once the planting season commences, that would affect supply, which will lead to shortages. And we could see these commodities start to, the prices record a higher increase.
All right, another issue now is the powerhouse. China's economy rebounded in 2021, but there's signs the momentum is actually slowing. Should we be concerned about that?
Oh, well, for China, China is one of the largest economies, and so it's very important in terms of trade, in terms of foreign aid, especially for emerging and frontier markets like Nigeria. So what it just shows you that, okay, that momentum is slowing, but then still, and again, they're maybe slowly and gradually getting to the pre-COVID levels. But again, there are still issues. We talked about supply and chain disruptions. We know that last year there was a point where China and Europe are experiencing some energy crisis. And again, what is even happening right now in terms of between Russia and Ukraine and with the US and the NATO.
And the energy crisis
the
is
energy
still
crisis,
on.
yes, exactly, it is still on. So definitely, these are some of the things that are going to affect the Chinese economy. And even bear in mind, so a lot of global economies now, including China, what they're beginning to do now, they're going to start to increase interest rates in 2022. We know that a lot of global central banks, the US Fed has mentioned it, the Bank of England last year increased its interest rate by 15 basis points. So they're going to start to do that when or once they can comfortably say that, yes, this recovery is on a steady path. And what that means is once we start to see global interest rates start to increase, the dollar is going to strengthen, which means for commodities that are priced in dollars, they become more expensive to purchase and the demand is affected, and we will start to see the prices of these commodities to fall. So for China, major economy, we shouldn't worry too much about it, but we should be concerned because if it's an indication of the fact that they're not producing as much, and because China accounts for about 30% of Nigeria's total trade, if China is not producing as much, it could lead to supply shortages, which again is inflationary and would affect Nigeria.
Quite interesting. And I saw that, see the stock market dipped again, 0.12. You know, we had that New Year rally, but it seems to be
well,
down.
Yesterday's own can be attributed to the inflation numbers which were released yesterday. I mean, they were released in the morning, so the market was able to react to it because the fact that inflation numbers increased, so they basically has just increased the possibility of a rate tightening in the Monetary Policy Committee meeting that is going to hold next week. And if interest rates increase, then obviously we're going to see a shift away from the equities market to fixed income instruments. So that could possibly explain why we saw that marginal. It was 0.12%. That's not too
because I was
significant.
expecting more grains and with boer foods actually.
Yes, exactly.
Tanking
Yes,
the market.
yeah, exactly.
All right, so let's look at agricultural, commodities now. What's happening in that space?
Yes, we've already talked about the domestic market. So for the global market, for the grains, so that's wheat and corn. So for wheat, we're seeing a decline in price due to increased global supply. Corn is experiencing the exact opposite. I mean, we're seeing a tightening, so that's why corn prices are increasing. Now, for our softs, that's cocoa and sugar. The prices of these commodities are increasing. Cocoa, we're seeing increased global demand, which is impacting positively on the price of cocoa, while sugar is due to technical factors. And we expect that, okay, in the next, for the rest of this week, these factors are likely to continue to play out for these commodities. But by time maybe like by March now, for instance, I talked about the interest rate hike. Yeah. If we see that happen, we could see a change in the dynamics of these commodity prices, especially for oil.
Okay. All right. We'll keep watching.
Yes.
We see oil is doing quite well.
It's doing well. It's doing well. Yes. But, it's a double-edged sword for Nigeria. Yes. So, on one hand, we benefit from higher oil prices. But then,
fuel prices.
Exactly.
All right, Damilola, we'll continue conversation on Thursday.
Yes, we will.
Damilola Kimbami, Head of Research, Financial Derivatives Company. Thank you so much.
Thank you, Ladi.
All right. We'll take a moment now. Business Morning returns in a moment. Welcome back. You're still watching Business Morning live on Channels Television. Now to our next conversation. Turn our focus to the real estate sector after the COVID-19 pandemic disrupted activities, which are the heart of real estate business, and the industry has continued to play catch-up in 2021 as the business environment was, dampened by inflation, skyrocketing exchange rates. Nigeria's real estate sector posted 3.85% growth in the second quarter of 2021 and expanded by 10% year-on-year in the third quarter, as well as sustained a positive quarterly year-on-year growth trend since Q1, the first quarter of 2021. Well, despite the quarter figure reflecting high economic activity, real estate and construction remained quite low. Well, joining me now to weigh on this is Bamidele Adewale, MD CEO, P1 Stars, to discuss this and other issues in the real estate sector. Great to have you. Good morning.
Good morning. Thank you for having me.
Yeah, so paint a picture for me, for you. How did the real estate sector perform in 2021?
Well, I think it didn't do too badly. Well, people expected it to do a bit better, but I think it didn't do too badly considering where it was coming from in 2020. Now, in 2020, the real estate sector was literally down because of COVID, obviously. Mm-hmm. Now, the reason why is because during the COVID period, everybody was focused on survival. That's what the focus was on, just survival, right? So people weren't really thinking so much about real estate. So it really suffered a dip. I personally witnessed it because I'm a player myself. I'm a developer in the real estate space. So I know how bad things were. But then I also saw a bit of a pickup towards the end of 2020 and into 2021. So I want to say that, yes, it wasn't as big as other sectors, but I don't think it did too badly, given the circumstances with COVID and with all of the uncertainties, inflation and all of that. I don't think it did too badly, to be honest.
All right. Now let's look at, luxury real estate now. How would you say it performed last year?
Luxury real estate did not perform so well. And I think that's partly because, I think COVID affected the income of everybody, really, both the middle class, the upper class, and I think the luxury segment has been suffering a bit of a dip over time.
Yeah, because you go around Banana Island, you see
there are a lot of, so it's not just something that happened last year or 2 years ago. It's something that we've witnessed over the last 5-6 years. There's been a bit of a dip in the luxury end. Where we are seeing growth is more in the middle segment, right, and a bit of the lower segment, but more in the middle segment. The upper end has been down for quite a while.
And I'm sure commercial real estate too, with the whole everyone going virtual now, people not needing to
exactly
have offices.
Absolutely.
Like before. How's that looking?
That is also looking like it might be suffering a little bit because now because of COVID, a lot of people feel they don't have to have offices. They don't have to have brick and mortar offices. So a lot of people work from home nowadays. A lot of people are going into technology and all of that, just to find better ways to do their business. So I see a bit of a dip as well in the commercial segment. I think where we might experience growth is more in the residential space and a bit of the industrial space. But the commercial space might probably witness a little bit of a dip going forward.
All right, let's look at some support that the real estate sector enjoyed. What did you see? Looking at government intervention in 2021, what for you was more beneficial for the sector? Coming from the government.
I think the government did quite a little bit. First of all, they established an agency called LASRERA, which is the Lagos State Real Estate Regulatory Agency. That was established, I think, a couple of years ago, 2020, if I'm not mistaken. And then there was also an enabling law that was signed last year, right, by the State House of Assembly. So that equipped them with the powers to actually enforce certain regulations and all of that. So that, I believe, would bring some sort of confidence to investors in the real estate space. But I do believe that time will tell regarding how well they're able to implement the law and sort of sanitize the industry. Okay, but at least they've taken the first step, which is to create the agency and to also create an enabling law. But I do believe that governments can do quite a bit more. I would like to see a bit more of private-public partnerships going forward, because I believe the government can play a role in terms of creating sort of the land. The government has the land, right? So let them create the land. Let the private sector then come and develop on that land. Let's see a bit more of that partnership going forward, okay? Then I think in terms of the banking space, obviously we want to see rates come down. One of the biggest challenges that real estate developers face is high escalating interest rates.
And we see global, regulators hiking rates at this time.
Yeah, global regulators hiking rates, and obviously that has an impact.
Meeting, we don't know what to
We don't know what's
going
to happen there. So obviously all of that has an impact on the space. And another thing is the banks don't even lend. A lot of them don't even lend to the real estate space. And I think part of the reason is because of the risk as well, But I would like to see banks lend a little bit more, because truth of the matter is that to really do well as a real estate developer, you need funds. You need access to capital. So one of the biggest challenges we face as developers is lack of funds. And when you have the funds are quite expensive.
Right. All right. We did see a Lagos State governor, push for, monthly rent in Lagos. For you, how feasible is that?
I think it can work to an extent. Again, the problem of implementation. How do you then force the landlord or the landowner or the house owner to enforce some of these things? Because a lot of transactions are done informally in Nigeria, generally, so it's very difficult. I remember a few years ago, they brought up this policy that says you cannot charge more than, you shouldn't be doing up to 2 years rental and all of that, but it wasn't implemented. A lot of landlords still do 2 years. Some even do more than 2 years.
Some were compelled.
Some were compelled to, but I don't think it really had the impact that was envisaged. Right? Now, this might probably have a bit of an impact in the short term because some people might feel, oh, let's quickly comply so that we don't run foul of the law. But I believe that if the government doesn't ensure that it continues to monitor the implementation of this policy, then we would go back to square one. That's what would happen eventually.
All right, let's look at foreign participation now. How would were there foreign investors? What was their participation like last year in the real estate sector?
There was a bit of foreign investors that came in, that brought money into Nigeria. But I believe that in 2022, I think it might dip a little bit. And I think the reason is because, think about it. What are the enablers of foreign investment, foreign direct investments? Foreign investors want to see an environment that is free of country risk, or at least the country risk is reduced to the barest minimum, okay? They want an environment where there's ease of doing business. They want FX stability. You all know how the FX rates have been fluctuating. That's a very, very big elephant in the room, So they want to see some level of FX stability. They want to see some security. Security is very, very big. And mind you, we're in a pre-election year, right? So there's going to be a lot of uncertainty regarding who the next administration
and I'm sure that whole Magodo issue also.
That whole Magodo.
It wasn't a pretty look.
Exactly. So there's also concerns regarding the judicial system and, conflicts within the real estate space. And also there are the macro issues, which I've spoken about. And then there are also sector-specific issues as well, which I believe, we Nigerians, we can deal with some of these things. We're used to some of these things, right? We've lived here all our lives, so we understand the system. But the foreigners don't really understand the system the way we do. So they're likely to be a bit more circumspect.
They won't understand why Omonile will be asking for
absolutely,
and all those kind of things.
So I think there might be a bit of a slowdown, personally, in the area of foreign direct investments in 2022. However, once the new administration comes on board in 2023 and we begin to hopefully see some level of stability in the macroeconomy and in the real estate space, then we might begin to see a bit more involvement of.
All right, let's talk about reforms in that sector now. What kind of reforms would you like to see? Regarding this issue now of Omoniles in this country.
I think the government has to play a role. The government has to step in. They've tried in the past, and it hasn't really quite worked. So I think they need to put in a lot more efforts. Now they have Lashrera. That is a good sign. Okay, they have a law, right? But then we need to ensure that from a judicial perspective, from our laws, just in terms of implementing and enforcing the laws that we have, right, they do a bit more. Cases need to be tried very, the speed, the timeline in terms of trying cases, that needs to be improved upon. And I just think there should be a lot more regulation of the space. I don't think we are really there yet. The sector is not really regulated. The way, for instance, you have the banking sector or the insurance sector, we don't really have that much regulation. So I think the government really has a very big role to play.
Yeah, quite a big role. But, it's 2022. What kind of investment opportunities, trends do you see, popping up this year?
Well, I would obviously start with real estate because that's and it's not really because it's my field. It's more because I think from a risk perspective and a return perspective as well, I think real estate presents a bit of a safe haven for a lot of people. Because really, think about it. It's brick and mortar. It's there. You can't steal it. You can't steal land. Once you have land, it's yours. But
there's another risk there. Okay. When you buy land for instance, you buy land and maybe you don't develop it yet.
Okay.
You have issues where somebody comes and says, "Oh, this is my land."
That's trespass. So of course, you have the risk of trespass. That is. But of course, if you buy from a proper real estate company, okay, and you do your due diligence, and you secure. I usually advise people to secure their landed
That's another
properties.
issue of taking possession
Taking
immediately.
possession
Even if,
immediately.
You know, sometimes funds. You don't have funds
Yeah,
to
you
take
don't
possession.
have the
So
funds.
what do you do?
No, I'm not.
Why can't you peacefully hold land?
Well, of course, I'm not saying real estate is free of risk. Of course, there are some risks, but I'm just saying that relatively compared to other asset classes,
Right.
it's relatively low risk, okay? So beyond real estate, I also think that there will be opportunities in the stock markets. I'm quite bullish about the stock market this year. And I think the reason is because being a pre-election year, there's going to be a lot of spending. Government is going to spend money, private sector is going to spend money. And as a result, the companies are going to do well. I see a lot of companies in the financial services sector, in the in the real estate space, everywhere. I think a lot of companies are going to do well in 2022, and as a result, that would impact on their stock prices. So I see some opportunities there in the stock market.
And so, but one of the sad moments of 2021, that Ikoyi building collapse, that was quite a sad moment, for the country. But how do you think that has shaped, practices in that in the construction sector?
I think what has happened is that people would would become a lot more careful about where they invest their monies, especially in that space. So gone are the days where you just invest in just any company that has a project in Ikoyi or in Victoria Island or in one of those highbrow areas. I think people will become a bit more careful. And I think the regulators as well, the government as well, would also become a bit more sort of, the scrutiny in terms of approvals and permits and all of that to be a lot higher going forward. So they won't just approve just any projects just for approving's sake. Okay, so I see a lot of, like I said, what I would like to call flight to safety. People moving to safer developers that have a bit more of a track record, right? I see that happening, and I see a bit more sanity being introduced into the space. I think it's, even though it was an unfortunate incident, I also want to see the good sides, and I think that eventually the real estate space, especially in that aspect, in that space, I think it will be better for it going forward.
And we still have the issue of quackery in this space.
Obviously.
Talking about developers, real estate agents. How can we address all of that?
I think, again, I will still go back to the government. I think the government has a very big role to play, just in terms of regulation, right? For instance, in developed countries, before you can go into real estate, you have to meet certain criteria. You have to have a certain minimum capital base, for instance. And I think that would help if we had, for instance, a capital base. So let's create barriers to entry. I think it's a bit too easy to enter the real estate space. I think just any Tom, Dick, and Harry can enter now. So I think what the government should do is to create some barriers to entry into the space, make it a bit more difficult for professionals or for real estate players to play in that sector. That way, we would be able to ensure that we sieve out sort of the bad eggs, quote and unquote, and gradually we'll then begin to move to the space where we are a lot more confident in our sector. And foreign direct investment would also improve as well.
Exactly, with all of that. All right, give me your outlook now for 2022, talking about this sector, all around.
I think 2022 is going to be big for real estate, and for a number of reasons. First and foremost, I think, again, I'll go back to the fact that it's a pre-election year, so there's going to be a lot of spending, okay? So all of that spending would dovetail into more projects, more construction, and all of that, okay? Now, there's also another very, very key factor that would also improve the prospect of real estate in 2022, which is infrastructure. We've seen quite a bit of infrastructure being done. For instance, I'll give you three projects, just three major projects. You have the Lekki-Epe Expressway. They're working on, the state government is working on the roads. They're expanding the roads all the way from Ajah to Epe, right? And then you have the Ijebu-Ode-Epe Expressway, which has been done. Very good job that was done. And then the Lagos-Ibadan Expressway. Those three projects alone have the capacity to really significantly boost. And then you have the Dangote refinery, which a lot of people expect it to kick off in 2022. All of that would have a significantly positive impact on the real estate space. So I'm quite confident and I'm quite positive that we will see some good growth in 2022.
Okay. All right. Well, we'll keep watching that space to see how it grows. We've had Bamidele Adewale, CEO P1 Stars. Thank you so much for giving us your time on Business Morning today.
Thank you for having me once again.
All right. Let's head on to the markets now with Aniete right there. Just after this short break. All right, now let's head on to the market with Aniete. Well, Aniete, quite an interesting session yesterday. We see Boer Foods there dropping in market.
Yes, good morning, Ladi.
Morning.
Like you rightly mentioned, Boer Foods, which has now displaced Nestle as the consumer goods, the consumer goods bellwether stock. Now, that consumer goods behemoth, which is what you now call it, caused about 0.12% drop on the all-share index at the start of the week, the third trading week of January. So, and of course, that has brought the year-to-date performance of the stock market to, it reduced it from 4.01% to 3.9%, just below the 4% increase that we've had, that we started the year with. So it just shows you that, well, yesterday it was more profit-taking, and then, of course, a flurry of red for the sectoral performance as well as the, volume of activities. Take a look at the sectoral performance. Banking was down, insurance sector was down, but surprisingly, the consumer goods sector, where Boer Foods will be having its closing gong and listing of shares on the NGX today, it ended in the green. As at the close of Monday's trading sessions, for the that shows you that the market was just not too much on a positive start. But to give us more insight into Monday's trading session, let's talk to stockbroker Rotimi Fakaejo at the NGX. Thank you for joining us, Rotimi Fakaejo.
Good morning, Anita.
Well, it was more of a bloody start for the week, and especially because Boer Foods, which I think by now they will be doing the listing of its shares, or the listing, the facts behind the listing of its shares, and then of course we'll be performing a closing gong ceremony. So can you tell us what's happening at the market as far as stocks are concerned?
Well, I think for yesterday it was mixed reaction, and I think for the fact that the week ended positive, for the week ended, the market started on a negative note yesterday. And I think the major movers for the yesterday trading session were Boer Cement and Boer Foods. Boer Foods came down and Boer Cement went up. And I think that implies a lot because the two are highly capitalized. But we saw fringes of smaller drops and rises in other securities, which were not sufficient to keep the market positive at the end of close. And with Boer Foods doing their fight behind the listing today, though I think the events have really been backdated, as I would say, because or fast forwarded. Because ordinarily, the fight behind the listing should have been primarily about the same day that the listing was done, or just a few days thereafter. But whichever way it is, I think after today's listing, investors will be better informed on whether to retain what they already bought, what they have already bought, or whether to take more of the security. Whichever way it is, you're going to have more facts and figures concerning the performance of the stock. So I believe strongly that maybe after today, depending on how it goes, then investors, the market will take another direction. But the normal thing that we usually expect at this time, which is the expectation of auditor report, activities that precede that session, we've not really seen it started because ordinarily by now we should have seen securities.
Rotimi.
But I think maybe when one or two results are released, then there'll be more hope and more activity with respect to other sectors.
Okay, Rotimi, I'm afraid I may have to cut you a little bit there. I think that's how far we can go as far as the market is concerned. We're just out of time. So, but thank you for that analysis, and we will look forward to how the market closes for today. So, Ladi, time is never your best friend.
Yeah.
But of course, better luck next time.
All right, let's see how today's session ends. Thank you so much, Aniete. All right, we'll take a quick break. When we come back, we head to London. Just stay with us. All right, let's head on to the UK now. We'll see today's labour market report shows UK's jobless rates dropped to 4.1%, and average total pay, including bonuses, grew by 4.2% in September-November quarter, while basic pay, ex-bonuses, was 3.8%. Let's hear more now from Juliana. Great to have you, Juliana. See, this rate dropped again, but the issue now, we see wages are now lagging inflation again. It seems UK workers are facing a pay squeeze here.
Absolutely. Not all that glitters is gold, and it is really difficult in the UK at the moment. Inflation is running at 5.1, as you say. Pay rises per year only running at 4.1%. Workers are feeling it. Bills are running higher, and there's definitely a sense now that, this squeeze is reaching all levels of society. As you said, according to the Office for National Statistics, unemployment has dropped yet again to 4.1%. Over 184,000 people entered the workforce last month. So this is good news, particularly as we know there is a squeeze in all sectors. Most employers now are looking for people to fill vacant positions, and it's not easy to get people to fill positions that they're not qualified for. Rishi Sunak, the Chancellor, has welcomed this new announcement. But then again, I think it's been slightly muted because we know that inflation is so high. Some suggest it could reach 6% within the next couple of months. We're getting that data tomorrow, and that is very, very important data because we know the Bank of England have just raised interest rates from 0.1 to 0.25%. But looking at this labour market data, they could potentially raise it again later this month, next week at the MPC meeting.
Right, we'll be tracking that. Now to some energy issues. Here, Business Secretary Kwasi Kwarteng will hold fresh talks with energy companies this week about energy bills. What are the expectations here?
Well, the conversations have been ongoing. He's constantly talking to energy leaders. We know that there's a fuel crisis going on at the moment here in the UK. On the 7th of February, Ofgem, which is the energy regulator, they are going to announce what they are going to be bringing up the price cap to. Some suggest it could be higher by 50%. So over £2,000 a year, people will be paying for their energy bills. That's a 50% jump, and there are major concerns from charities, opposition leaders. In fact, I think there's cross-party consensus here in the UK that something has to be done because potentially 6 million people could be put into fuel poverty. We're expecting that a vast majority of people living in the UK, once they've paid their rent or their mortgage, will be paying over 20% to heat their home and cook food, which is completely unacceptable. So I believe now the government have been backed into a corner. They know they've got to try and offload some of these costs, potentially reducing VAT, which I believe for energy bills is at 5%. Perhaps they'll be removing that. There were some whispers from backbenchers from the Conservative Party that the 12.5 billion that was to be given to the NHS and social care from the national insurance rise in April will not happen, and that money will go to trying to offload bills. So it's a really important talking point and critical at a time when it is pretty tight living in the UK.
Yeah, right, quite a critical talk there. All right, Juliana, thank you so much. I'll see you at 1:30.
Thanks very much.
All right, now let's look at what's happening in the crypto space. See Bitcoin there failed to stay above 43,000 support against the dollar. BTC is trading in a bearish zone and could continue a move below $41,200. Bitcoin is struggling to climb above the 42,500 and 42,800 resistant levels. Let's look at the market cap there. We see it's $2.02 trillion, down by 1.74% at 8 a.m. this morning. Volume traded in the total crypto space, $75.59 billion. And see price of Bitcoin at 8 a.m., $42,206. It's down 1.57%. It's trading below that at this hour. Price of Ethereum there, $3,197. down 2.79%, and we see volume traded $11.99 billion. Top odds by market cap, see it's mostly red, just like yesterday. But again, we see Cardano still in the green at $1.56. Cents, up about 2.52%. To see the reports that more transactions happened on the Cardano blockchain than Ethereum. So I think that's what's prompting buyers there. A lot of buying pressure for Cardano. We see BNB there, $474, down 2.42%. Solana also taking a beating there, $140.27. And XRP still looks, quite stable, though still in negative territory at this moment. And we look at the top 5 gainers there. We see, surprisingly there, we see ICP up there at 3.56%, and IOTA up about 5.15%. All right, let's bring in Rume Ofi now to weigh on this matter. Great to have you, Rume.
Good morning, Ladi.
Good morning, Rume. So I see Fidelity Investment is saying that countries that secure some Bitcoin today will be better off than their peers. And I'm wondering, Rume, is El Salvador doing any better right now?
I think one thing we need to take in consideration is the fact that Fidelity Investment is not a small fry. Fidelity Investment has been in business all the way back since 1946, actually helping to invest funds of about 23 million people globally. So it's not something we need to take for a joke. I also think that the fact that El Salvador has been involved taking Bitcoin as a legal tender, it is not something that is going to transform into the successes overnight, but it's a gradual process, right? And September 7th, 2021, last year, they came out to say they are actually using Bitcoin for their legal tender, right? And the fact is, this is the first of its kind. And one thing I really like about the president, Neil Bukele, though young, maybe that's why all of these innovations are coming, is the fact that he's designed certain things that could work effectively with all of these innovations. For example, they are able to use renewable energy from the volcanoes to power the mining facilities that is going to help to mine Bitcoin. And, with all of these, it makes electricity, if the electricity over a particular area is cheap, it makes investors to want to go there to involve themselves in the mining process, which is also could be in our own case because we flare gas in this part of the world. But aside that, I also think that there's also a step he made, which is very smart. He said that if you have 3 Bitcoin, you could be given, if you invest 3 Bitcoin in the country, you will be given a permanent residence, which also will also bring investors to come in. And they partner with Bitfinex, one of the biggest cryptocurrency exchange platform, to enable them work some things out, like the Shiva wallet and how all of this is. That is not even talked about the idea of their the Bitcoin bonds, because he actually initiated a Bitcoin bond to build a Bitcoin city. So all of this that this young man is doing is going to pay. He's going to pay good profit in a short period of time. And this whole thing, as you said, is about, he's going to put a timeline to it of 10 years. If you look back, Bitcoin just became 13 years, and we are seeing 3 trillion market capitalization. So El Salvador is just the case study, and let's keep an eye to that.
Wow, Bukele, quite bullish on Bitcoin. Wow, that's quite interesting. You can, with just 3 Bitcoin, right?
Yeah, exactly. So maybe you could think going there very soon.
All right, Ruben, thank you so much. Enjoy the rest of your day.
Thank you very much, Laddie. Thank you.
All right, now, well, we've seen the top 5 gainers there. We see ICP up there, Internet Computer, doing well this morning. But 5 losers there. We see the top 5 losers. We see AMP there. It's down about 5.88%. IOTA down 4.74%. And we see Rose there and Luna all doing not so well this morning. Well, the market is quite volatile, as everyone says, so these are expected in that market. All right, thank you so much for watching Business Morning today. Remember to join us at 1:30 at Business Corporate for more stories and business activities in Africa and beyond. Thank you so much for watching. I'm Ladi Williams. Bye for now.